Welcome to another video. So I know that there's a lot of people who are looking to get into property, looking to build buy-to-let portfolios, who are probably sitting on the fence because we're obviously in uncertain times, everything that's going on with the economy, and it's looking quite inevitable that we're going to fall into a recession. So the question is it a good time to start your buy-to-let portfolio, and how should you proceed if you want to get into property? Now that's a question I'm definitely going to answer in this video, and you might just be surprised at what I have to say. Now firstly, going into a recession means a sustained period of negative growth. A struggling economy means that companies don't make as much money, people have less disposable income, and all in all, it's very worrying times for the economic outlook of our country. So why on earth would you start investing in property during times like this? Now we've all heard Warren Buffett's famous saying, to be bullish when others are being fearful. And for my personal view, I think this is what is coming. I think that a lot of people are going to be fearful over the next few years, especially in property and especially with the declining economy. I think this is definitely going to ring true. Over the last couple of years, property and especially property investing has gone stupid, it's gone ridiculous. The opposite of that saying is to be fearful when others are being bullish, and everybody has been bullish over the last couple of years, and we've seen a massive spike in house prices. We've also seen a massive spike in new people getting involved in property. But now I think the tables are going to turn, people are going to become more fearful, therefore this opens up a good opportunity for you to start your own buy-to-let portfolio. Now another reason that people will become fearful is due to the sharp increase in inflation. Now, actually, inflation is a good thing for property investors because when we have inflation, it means the price of everything goes up. Therefore, if you own property, there's a good chance that the price of that property is going to increase in value, whereas the value of our cash actually decreases. So if you hold assets during inflationary times, then your assets are going to increase in value. Also, when we see times of inflation, it means that people's surplus cash is decreased. People have less spending power, and we normally see that during these times that rental demand goes up. Therefore, if you're a buy-to-let landlord, you're going to see an increase in the market of more tenants. Therefore, if there's more tenants, there's a higher supply and demand, which means the prices that you can charge to rent your properties also increases. So yeah, for me, starting a buy-to-let portfolio or building your buy-to-let portfolio during a recession is a good time to get going. So if we put these two things together, being bullish when others are fearful, and also the fact that inflation pushes up prices and pushes up rental demand, then it can be seen that this is actually a good time to invest. Now, I know there's a lot of talk of housing crash coming up. Obviously, interest rates keep going up, which means a bigger squeeze for mortgage payers. Also, the fact that inflation skyrocketing, the economy is looking dire, stocks and shares are going down. Despite of all this, and despite of all the fear surrounding property, you have to remember that there's still a shortage of housing in this country. Regardless of what is going on, there's still a supply and demand issue. There are more people wanting houses than there are houses. Therefore, simple economics derives that if there's a supply and demand issue, then prices cannot go down if the demand is higher. We can't get over the fact that there is a shortage of housing. Now, as long as there's a shortage of housing, then prices cannot significantly drop. It's just as simple as that. Now, I have spoken on this channel before about my predictions, what I think is going to happen to the property market. And one of those predictions is it will start to level out, it will start to cooling off, may even dip slightly. However, I can't see a big crash coming. And this demand issue is this thing that is propping it up, the thing that will keep the levels, keep the prices of property up to the high levels where they are today. Now, another good thing for investors to start investing during the recession is the housing market will start cooling off. And what I mean by this is the fear factor. So you'll start to find that a lot less people are getting into property during the recession than they were in the last 2 years. Now, if less people are getting involved in property investing, that means the competition becomes less, it means you're then open to negotiation. You can go and view properties and you can actually negotiate a better price, whereas at the minute, or especially in the last 2 years, if you went to view a property for a buy-to-let, chances are you'd be competing against 10 or 20 other buy-to-let investors and you'd have to offer way above the asking price to secure the property. Whereas if the market starts to cool down, which I'm pretty sure it will do, then it gives you a better opportunity to negotiate deals. Again, another positive for getting invested in property and building your portfolio during a recession. Remember, people are fearful. Now, if you can remain bullish while other people are being fearful, then you're going to put yourself in a good spot, you're going to give yourself good opportunities, and you're also going to take advantage of the good deals when other people aren't. Now, one of the worst things that you can do is to just stay sat on the fence. If you've been looking to get into buy-to-let property or property investing or developing, and you've been thinking about this for a number of years or months, then the chances are you're probably never going to get into it. So there's never a good time and there's never a bad time. However, the point that I'm trying to get across in this video is, if you're fearful of a recession and you think it's a bad time to invest, then if you look at the facts that I've put together in this video, then you should come to the conclusion that actually building a portfolio during a recession could actually be a good thing. Now, there are some important data points that you can look at to help gauge an idea of the market, to help you when you're buying your buy-to-lets or you're buying your properties. Things like the number of monthly house sales. If that starts to decrease, that's a good sign that people are becoming fearful, the market's cooling down. Another good thing to look at is the ratio between earnings and the price of property. When that starts to level off, again, the market's cooling down. Also, for those people that do have a lump sum of money ready to invest, if inflation's at 10%, which it is at the minute, is around that figure, then that means that your money is losing 10% of its value per year. Now, if your money's in an asset and an investment, the chances are that your money is increasing by 10% per year due to the inflation. So keeping money in the bank at the minute's not a good idea. Investing in property, for me, property is the best investment you can make. The majority of my portfolio, the majority of my money is held in UK property. I mean, I do diversify, I do have other investments, gold and silver, stocks and shares, but the majority of my money is in property due to two very good reasons, and that is cash flow and capital appreciation, which both happen at the same time. And property is just a proven thing over the decades. If your money's in bricks and mortar, then it's fairly safe to say that your money's always going to work for you, it's always going to increase in value. There will be bumps along the way. However, if you look at past data, everybody knows that property over time goes up. I hope you enjoyed this quick video. If you have any opinions on this, please leave your comments below. If you haven't watched the last video that I released on how to make £5,000 per month in property, then go ahead and watch that, because that'll give you some good ideas and good inspiration to get started in property. Now, I don't know the outcome or the future of what's going to happen regarding recession, regarding the economy. I can have a pretty good guess at it, but if you're starting out in buy-to-let, starting out in property investing, then don't let the recession put you off. Don't be fearful because everybody else is being fearful. Do what's best for you. If you have money available to invest, then invest it. And the most important thing is to always take action rather than sitting on the fence. So I'm Jason, hope you enjoyed the video, and I'll catch you soon.